Hello and welcome to my market diary of March 2023. So after about 2 years of being out of the market, really, I didn't do much in 2022. I made like 3 trades total. So I'm re-entering the market after being fully in cash for the last year, and I'm just taking you through how I decided to build my portfolio from scratch and just kind of, this is more for me just to make sure I remember what I was thinking when I did it. But you're welcome to follow me along on the ride. So, rules of engagement. First of all, here's my thesis. The market has bottomed out. I'm trying to find companies whose products I use. I'm trying to find companies whose products are, well, not whose products are on sale, but whose stocks are on sale. So I'm trying to find things that seem undervalued to me, or at the very least fairly valued. My plan is to reinvest the dividends quarterly, not necessarily in the stocks that the dividends came from, but the total amount I'm planning on reinvesting. And my time horizon is 3 to 5 years. Now, my goals, I want to get dividends to at least a 3.5 annual rate. That is the money market amount that I currently have, and I would like to make at least as much as I was making in the risk-free money market. I'd like to have a diverse set of holdings between 4 to 5 industries. I'd like to make it an equal weight portfolio on capital, although I'm okay kind of going higher or lower when I start dollar cost averaging. But initially, I want to be the initial capital I put into each stock, I want to make even. I want to mix a growth, value, cyclical, and consumer. And I want an annual return of about 7 to 9%, so dividends and value of the stocks over and above what I bought them at. Now, for risks, the market might not have bottomed out yet. I'm assuming the market has bottomed out because of a couple of factors I was looking at, mostly sentiment and yield curve, and a couple of other things that I was looking at. And at the time, the banking crisis hadn't happened yet. So there's a bunch of things that I now know has happened that I didn't know had happened when I first decided to open up. So like none of the banking crisis had happened yet when I first started. I might fall into value traps because I'm looking for beaten up companies. Also, there's no guarantee that the company will be here in 5 years. I'm assuming they all are going to be here in 5 years, but crazier things have happened. Also, I'm entering blindly on a set day. I'm just essentially setting a limit order for what the stock traded at the bottom of the previous day. And I'm not looking at any other indicators. I'm just choosing March 1st as my drop dead entry date for this portfolio. And also, I might not be taking into account all the macro econ environment or the geopolitical risk going on, because you'll see that I'm going into some there's a lot of macro econ and political risk that goes into the stocks I picked. So I know that going in. Rules. I am assuming the dividend growth model of 0%. Why am I assuming 0%? Because I want to be as pessimistic as possible. I want to assume that they're not going to raise their dividend, but I'm also going to assume they're not going to lower their dividend. So it's about as conservative as you can get, because usually you want to do a 3% dividend growth. I'm assuming a 0%. I'm also going to dollar cost average quarterly, so whatever stock is beaten up the most every quarter, that's the one I'm going to reinvest in. Now, I'm only going to feed my portfolio until I get that achieved 3.5% dividend rate. So I will constantly going in this month. This will probably be my most active month for a while. And then once I get to that 3.5%, I'm only going to use dividends to reinvest. This is going to be long-term capital gains only. I am not trading. I'm going to try to invest. I'm going to try to stay in regardless of what the market does. If it goes up or if it goes down, I'm not going to profit take, and I'm not going to panic and pull out early. So some miscellaneous. Why 3.5%? It's the risk rate from a money market account that I'm in. Why 7 to 9%? Because if you take the AAA bond rate of 4.5% for March and you take the money market rate of 3.5%, I just added them together, and 7 to 9% is about where I want to be. Now, could I get 7 to 9% just being in these two things? That's not quite how the math works, but it's a good way for me to determine how much I want to see the market return. So the money market is just for dividends, and the AAA bond rate is what I want for the stock returns. So that's really how I'm doing that math. Why long term and why no trading? Because I don't need this money for 3 to 5 years, and this is going to be the safest way to invest without me just gambling it on options like I have done in years past. This is me really trying to be a more professional investor rather than a risk-seeking trader. Why am I funding using only dividends? Because it's going to limit my risk and it's going to allow me to use other saving avenues for any additional saving that I plan on doing. And how am I going to enter? I'm going to do an initial investment of $5,000 per company at the market rate of when I enter, and I'm going to dollar cost down with limit orders. Now, the initial 4 stocks that I chose, the first one is going to be Walmart. I decided to put my money in on the weekend of the 24th to 27th of February, and I decided I wanted to put a limit order in of about 142, and that actually filled right when it opened up that first day. The second one was ExxonMobil. Now, same thing, I put my money in on the weekend between the 24th and the 27th, and I was looking for about 110 because that was about where I knew, because I'd been looking at Exxon for over 3 months at this point. And I kind of wanted like 100, but 110 was where I was willing to go for an entry point. So that filled about 2 days later. Microsoft, again, I put my money in that same weekend. I just funded this account that weekend. It was finally the deciding day I decided to pull it. And I decided 250 was a fair amount for Microsoft. It kind of fluctuates up and down a lot, so 250 felt like a fair value to put a limit order in for. It ended up filling not that first day, but the second day before the market opened. It actually opened lower than 250, so I got to fill slightly lower than 250. And finally, Amazon. This is not a dividend one, but it is a growth stock, and it gave me a little bit more. Amazon's been beaten up, and I can see it going back to its 52-week high of 170. So I just wanted to enter at whatever I could enter at. I figured 92 was a good price. So I entered there. I said 92, ended up filling there at 92. So now let me take you through how I am valuing all of these stocks. So if you look here, here's the percentage of my portfolio on a stock basis. So if you take the number of shares I have and divide it by 156, that is how you get it. These should add up to 100. Same as my capital. So if I was investing $5,000 into each one, that should end up at 100%, and all of those should be around 25%. Now, I put more into Exxon than into Walmart because that had a higher dividend yield, and that's what I was looking for on this initial phase in. The current dividend, so using the previous, so quarter 4, quarter 1, depending on when their year ends happened, this is the last reported dividend that they had. This is the amount that I would be making per share, so the dividends per share on an annual basis. This is the amount taken, how many stocks I bought. This is the amount of annual. Dividends I'm expecting. This is the total. This is the total per share. This is my dividend yield. This is the total amount invested, and this is my total number of shares. Now, why am I doing dividend per month when all of these are quarterly? Because it's a way for me to figure out, on average, how much would I expect in a monthly interest-bearing account versus how much I'm getting in dividends a month, even though I know that I have to multiply it by 3 to see what I'm going to get every quarter. So this is going to be the quarterly amount that I actually get, and this is just for my own knowledge of saying, hey, if I was in a savings account, would I get at least $25 worth of value? I would have gone more if I had put in this amount of money into a money market account, but I'm in the very beginning stage, and 1.55% is not where I'm going to end up. So I knew I needed a high-yielding dividend. So I found Enbridge. It's the gassy dividend. So one of the reasons why Amazon was so late on the buy was not only because I was looking for that 92 price point, but I was also trying to decide whether or not I wanted to go into Enbridge first or Amazon first. And I kind of did an opportunity cost analysis. I assume that in 3 years, Amazon will be back up to about 170. So if I buy it at 92, what would my max profit be? It would be about $4,200. Now, if I bought Enbridge at 37, which is where it was when I first went in, and I took the dividends and assumed 0% growth, and I assumed that it hit its 52-week high of 45, what would my final value be? Well, it would be a break-even price of 132 on Amazon. I think Amazon will hit 132, so I bought Amazon first. Enbridge is what I'm coming in at second, and while I would like $37, as you can see, 37 was gonna be rough. So I put my money in there. We hadn't seen 37 in the last month or so. So I knew 37 was going to be a bit of a stretch. So I put in for 38 instead. And 38 finally filled right there on the 9th. So once all that was done, here's my new portfolio allocation as of the 9th of the month. We're now up to a 2.65% yield and about 633 annualized or $55 monthly. So then now I'm looking to add to dollar cost average. Now, Enbridge and Exxon were getting hammered, and I knew it. They were trading well below their moving averages, and I wanted to buy in while they were doing that. So over the weekend, I was looking at these stocks. I'm going, they're going to pop. The gas prices are artificially low right now. Something's going to happen. We have too many geopolitical factors going on. And the market's just thinking that the status quo is going to go on. I think gas prices are going to go up. So over that weekend, I decided to put in a bunch of money, and I put in limit orders. So I put in a limit order for Enbridge. I wanted to hit about 36.5. And for Exxon, I wanted to hit 99.5. As you can see, Enbridge did hit 99.5, but I did not get the full fill I wanted because I wanted to get up to 100 shares. I only got 43 of the 50 I put in at 99 per. And as you can see, the next day it did pop. I believe that was a Russia announcement, not the Saudi announcement, because the Saudi announcement came later on in the month. There was a real good pop on Exxon. It went up to 115 one day. Same for Enbridge. I also got that fill. I wanted 68 shares. I got them at 36.5, and it did fully fill. So once that was done, here's my new allocation. I now have 200 shares of Enbridge and 93 shares of Exxon. That brings me up to a 3.15 average for an annual dividend amount of $1,000 or a monthly dividend amount of $83.49. Quarterly, that will be about $250. So if you want to look at this from an accounting perspective of all the trades I made, we're looking at Walmart. I only made one transaction with Walmart. It was $227. It was February 27th. I bought 32 shares at $142 per. At the end of the month, on March 31st, $147 was the value of it, so I made a total profit of $174. Exxon, I made those 3 transactions. You can see the fill for the 321 happened in 2 different ones, so it really didn't want to fill. I only got 18 at first, and like 5 minutes later, I got 25, and then it never hit 99.5 again. So I was lucky to get that second 25. But anyways, as I did mention, there was a massive pop because of the Saudis making that announcement. And so I'm now at 109.66. Microsoft. Believe it or not, I went into Microsoft before all of the AI hullabaloo and before all of the Activision stuff happening. So Microsoft has been a really good guy for me, and he's at 288 now for a total profit of 788. Now Amazon. Amazon's also been really good. It went back up over 100. I only made the one purchase initially at 92. I thought about trying to get up to 100 on that one if it came back down, but it never did. So long as it's above 100, I'm not going to reinvest in it. And then Enbridge, obviously we did the 2 transactions, the original 132 and the last 68. That brought my dollar cost average down a bit to about 37.5, which I was happy with. And for a net total profit of 132. Although this is my dividend stock, so I'm not looking for a profit on the stock side. I'm looking for a profit on the dividend side. So, end of month results. The net value of my portfolio was about $34,000. Net paper profit was about $2,100. and the dividends projected by the end of Q2 is $250. Now, because I missed the DivX date for all of my stocks except Walmart, I'm not expecting a dividend until May, June-ish area. So I can continue adding up until May, June, whenever the next DivX end date is going to go on. And I'm going to try to get that number up a bit more. But as of right now, it's 250. So my plans for April. I want to hit that 3.5%. I want to get my adjusted monthly average dividend to about $114. That number is particular to me because that's how much I'm looking to invest in a stock portfolio per month based off of what I make in my actual job. So that's a personal number to me. That's not like, hey, you should invest this amount of money. No, this is just a goal of mine, is I want that much to be able to invest in the stock market every month. And I'm also going to watch for price crashes because the news is so volatile right now that there's a couple of industries I'm kind of looking at going, there's going to be some interesting things happening. So I can tell you April has already been very active, and I can't wait to show you what happens at the end of April. So thank you very much for watching. I plan on doing these monthly, and I plan on doing a retrospective of everything I've done trading since 2018 when I started, and kind of do a retrospective of the things I've learned and why I've changed over time. So thank you very much for watching. I hope you enjoy this series, and I hope that future me doesn't think that current me is a complete idiot, because this is largely for my own memory to learn from my mistakes, something that I do frequently. So thank you very much for watching, and have a great day. Bye.